Hello, it is May 5, 2023, and you're watching the Awesome10X investing channel. This is Nikki, and we're going to talk about today's market updates. So let's begin with some earnings season so far. Let me just present. Wait up. Let me share my screen, guys. Okay. I think this one is, oops, this one's easier. Okay. Okay, so for today's topic, vertical spreads on companies reporting beats or misses, let's discuss how to utilize them again. These are vertical spreads or credit spreads. You can actually make bullish puts, you can make bearish calls. So it's not necessarily just a bear spread. You can actually make bullish beats, so bullish puts on some names that have beaten. And then you can also, of course, do a neutral strategy utilizing vertical spreads. So before we begin, let's also share that you can open an account with webull.com. The referral link is also in our YouTube links below. You can see that this is a.webull.com.sg/i/awesome10x. You can check it out that they have a promotion wherein this month of May, from April 28 till May 31, you can get up to $500 worth of fractional shares, standing a chance to win a Tesla Model 3, fund any amount, maintain funds for 30 days. And this is your all in one financial platform. It is listed, it's not listed, but it's actually primarily headquartered in Singapore, but it actually allows Southeast Asians like Filipinos, like us, to actually open in a US market account. You can start investing with just fractions, say $100, $500, etc. And you can fund any amount as it says here. So you can try this out. Try to open an account. Just check out the links here and see for yourself. Okay, so currently, as of May 5, 2023, the volatility S&P 500 index actually has bounced from about 15 to 19. Recently, of course, we saw the market bottom out once it actually reached as high as 28, 29, 30 here, which happened around March 10, March 13, which signaled a short-term bottom in the market. And so far, there was also a short-term top here at about 16.15. So we're actually in the middle side. However, this 19 to 22, the more that we actually spike the volatility, the more we're actually closer to a potential short-term bottom, which means that from an earnings or from a from a from a trading standpoint, it makes sense that as the SPY or the S&P 500 drops consequently towards 405 or 400 area, the natural thing to do is to buy bullish calls from about 405 to 407, or you can make bullish put spreads wherein you collect credit by selling puts on 402 and buying 401. So how do we do this? Yet again, let's just repeat. Remember that if you sell a 402 strike put, you're actually receiving. So in this case, you're actually supposed to receive $4.64 if you sell a 402 put. Now, of course, you cannot actually just sell puts without a huge collateral. And so we do a vertical spread, which means that when you sell a put, you're also buying a put, wherein you have to pay, if you're buying a put, 4.36 here. So you're seeing that 4.64 minus 4.36, you're roughly getting about 28 cents. Or if you try to get a midpoint here, let's say you get to sell at 4.63 and you get to buy at 4.3, you might receive 33 cents. Since this is a dollar with spread, you could receive one third of the with spread and then risk the 67 cents. This is expiring 14 days or 2 weeks from now on options expiration date this week of May 19, 2023. Since a lot of the earnings has been released and majority of the big tech has generally made a beat. So you are of the view here is that with majority of the earnings getting beat, you've got Apple, you've got Microsoft probably having very shallow retracements moving forward for the next 2 weeks upon options expiry. Your probability is to make a receiving of a credit rather than by doing a bullish put spread. Therefore, it makes sense for you to make sell 402 puts and buy 401 puts. This is a bullish put spread. So that is a SPY bullish put spread 402, 401, expiring on May 19, 2023, where you can get about $33 since this is one contract, but you would risk $67 in case the S&P 500 breaks down below 401. Okay? So how do you win in this case? As long as S&P 500 remains above 402, wherein your strike price is sell put 42, then you win. So let's say from now and the next 14 days, the S&P trades at about 405 or 406 or 407 or even higher. Chances are you get that 33 cents collected. So maybe there will be a fast decay because this is an out of the money bullish put spread, as you can see. So you would get the you would get the extrinsic value very fast since this is a sell credit. So you're getting the credits, right? And you can actually consider even profit taking it if you get a 50% decay ASAP, no, within say a week or say 5 days or 3 days. At the same time, if you are also on a bullish call spread, this is a vertical spread wherein you are the one paying, not receiving. Here, if you buy a 405 call, which is an at the money call, since the price last night is 405, and you believe that at the very least it would bounce from here from 405 maybe towards 407 or 409 or 410. So you're seeing actually that if you buy, you can potentially pay $6.26. While if you sell calls on 407 to limit your to basically limit to reduce your cost basis basically, then you'll have to pay a 407 call. So we can see that if you buy the 405 calls, you're paying roughly $6.26. That's the midpoint. And then if you sell the 407 call, you're probably receiving $5.08, which means that 6.26 minus 508, you're roughly paying about $1.19. So let's assume that you can try to get a bullish call spread by paying one. You can see that this is a $2 with spread because a spike can go 405, 406, 404, 403, for all you know. So you might be able to buy a bullish call at a cheaper price. Since this is a $2 with spread, you pay one with a maximum reward also of one. So this is a 1:1 risk reward play with, in our view, an advantage to the bull side given a lot of the earnings have been released and a lot of them have actually been beating estimates. And therefore, you're actually seeing a potential bounce play in the 400 area or 405 area. So let's go through some earnings here. Apple's latest earnings show the Mac is slumping, but services are soaring. So you're seeing actually that what saved Apple in terms of the beat this quarter, despite the revenues actually falling about 2-3%, is because the services or the service revenue catering towards the Apple TV Plus, catering to the Apple Music, and so on, have hit an all-time revenue high again. And the iPhone lineup is faring well, and more exciting news would await fans as WWDC, the Developers Conference, will near this early June. So let's just go through some numbers. Yes, the second consecutive quarterly revenue decline. We're seeing actually magnanimous declines overall in the industry, but the market was actually quite happy that the revenues only declined 3%. This is a beat considering the market was expecting that revenues would have fallen about 5%. Take note that the beat happened mainly as services rose with a $20.9 billion revenue, while the products where consumers were scaling back on smartphones, computers, fell 5% towards 73.9 billion. So it was more of a relief that despite the looming recession fears that the products of Apple only declined by 5%, it didn't drop, say, 20% or anything drastic. At the same time, operating margin was 30%. So that's actually, which made the earnings per share also a beat, 0.09 cents beat. They got $1.52 higher than the expected consensus estimates. And they also made a buyback plan this year of about $90 billion. So that's pretty huge. That's why a lot of people are pretty they generally lifted the shares of Apple about 2% after the reports. Okay, so we can see that Apple now has more than 975 million paid subscriptions across the services, up 150 million over the past year. Take note, the services business is an increasingly important revenue driver for Apple. That services is now $20.9 billion. And obviously, services margin are well in the 90%, whereas products margins are very small, such that they are earning a lot despite revenues actually down 3%. So you're seeing that Apple reports better than expected quarter. When you're saying that driven by iPhone sales, technically it was driven by services, and the fact that iPhone sales didn't materially fall as bad as people anticipated. So Tim Cook actually said it was quite a good quarter, even from an iPhone point of view, relative to the market. When you look at the market stats, take note that Samsung, some competition for the phones were actually dropping huge, whereas Apple didn't really have a materially huge drop this quarter. So we are pleased to report all-time record high in services revenue, a March quarter record for iPhone despite the challenging macroeconomic environment, and have our installed base of active devices reach an all-time high. The fact that it's now nearly a billion, you have 975 million paying subscribers, that tells you that iPhone is generally a money maker, a real cash flow to them. And of course, they said that although other tech heavyweights have laid off thousands of employees in recent months, Apple is not considering broad cuts, and I view this as a last resort. Mass layoff is not something that we are talking about at this moment, Cook said. The company is also rumored, Apple's rumored to introduce a 15-inch MacBook Air and other machines in the coming weeks, which could give Mac sales that much needed momentum. Take note that iPad revenues was down 13% since a quarter a year ago. And the Apple's wearable category, the Apple Watch fell, and all the other wearables fell by 1%. So so Apple is going to kick off their WWDC Developers Conference this June, wherein people are also expecting to see Apple's long-awaited debut, the mixed reality headset, which will feature advanced eye and hand tracking, supporting many existing apps, which could sell for about the price of at least $3,000. We'll see how well the demand for that mixed reality headset is, what would happen to Apple's share prices by then. But until I think after reading the earnings report, you could see that there is quite a bullish note on Apple's numbers that could actually help lift the stock and also lift the SPY and bounce from about 400 area or 405 area. So this is generally a quarter that you could make some money on the long side. So in case that you are looking to do a long side or more of a neutral stance, since it's not really that wonderful, but it's not really that bad either. One thing that you could actually do is consider an iron condor. So for May 19, which is the options expiry for this month of May, you could consider the fact that Apple 165 perhaps it's not going to break out too much with that type of number. Yes, it's not bad, but it's not like a number that you will be going 10% beyond, so you can do actually two things. So if you do a 175 180 bear call, you could receive an 82 cents credit there. And then for the 155 150 bull put, since we believe that Apple's not materially going to go down, you can actually also receive about 66 cents. If you do that, you can get about $1.50 reward with a risk of 350. This is what an Apple Iron Condor is. So let's assume that you make a $150 reward. What exactly is the risk here? Your risk is that Apple, after reading the results, that it actually breaks below 155. So apparently, it even drops. Your break even is 153.5 there, since you receive $1.50, right? Obviously, the sell calls here will make money for you. That expires, and this one is the problem if it falls. At the same time, although you saw that Apple's numbers were great and you thought, yeah, actually it's great, but it's not too beautiful, and you thought that, yeah, maybe Apple goes up, but not significantly beyond 175. And let's say suddenly Apple, suddenly for some reason Apple goes 175 above. Actually, your break even is 176.5. So just take note that you do have that credit spread, and your break even prices here is 150.5 or 176.5. Anything in between, of course, you just pocket at $1.50, which makes this Apple Iron Condor a neutral strategy, wherein you just believe that maybe Apple goes up 172, or maybe Apple goes down about 157.50, etc. So it's pretty much a small range for Apple for the next 2 weeks around May 19, 2023. You could consider that. Um, yeah, so yeah, this is for the Apple for June. So that's for May 19. And then let's take a look at the Iron Condor if you want to have a longer term expiry. So for a longer term expiry, yes, there's going to be a June WWC Developers Conference. So it's pretty farther out. So you might want to actually consider, say, selling a 180 call and buying a 185 call. The credit there would be about 80 cents. Now, if you also do a sell 150 put and buy 145 put, you also would receive about 63 cents. You might get a gain of about $150, a fixed gain, and a fixed loss in case you're wrong at about $350. So try to get about $150 to $250 if you can for June 16, 2023. This is also an Apple Iron Condor that you may want to consider, assuming that your view on Apple is pretty neutral. It's neither super great, neither super bad. So we think that it's actually more of a slight consolidation range for Apple after those earnings results. So if you want to check more about Apple revenues by category, so year-on-year growth, you can see that iPhone actually still managed to grow 2%, although the Macs and the iPads were down. Macs are down 30%, iPad down 13%, wearables is just down 1%, but services grew about 5%, with a total year-on-year growth rates of about negative 23. You can see though that the 94 billion, despite that drop from Q1 2023 to Q2 2023 for Apple revenues, that's actually a beat considering the market assumed that Apple revenues this quarter was gonna really fall. So a down 3% for this quarter isn't that bad. So thanks to ECMO Kaya for this category result report for Apple. So in case you're really interested on the quarter and quarter, you can see that Apple services revenues has been continuously growing. Notice that in Q1 2019, it used to be just 10 billion, and now it's a $20 billion category. And most important that I think that you have to understand is that the services category has been growing pretty significantly. So it used to grow pretty fast with about 17% growth here. Now it's not growing that much, about 5-6%, but still, guys, this is a huge revenue category, $21 billion every quarter. Imagine getting about $80 billion of revenues, wherein it's all just subscription, servicing. So that's really quite a significant jump for Apple over the last 4 years. So Apple revenues is now becoming, services is really becoming quite a big contributor to the bottom line of Apple. Now, let's take a look at another great earnings beat. We're going to talk about Square, aka Block. So you can see that Square has already fallen 80% from its peak, dropping to as low as $50. In fact, during on Hindenburg here, from about a high of 90, it dropped to as low as 60. And prior to earnings, it was trading at about 59 areas. After the numbers came out, though, it was not surprising that Block, aka Square, would rally 4 or 5%. Let's take a look at the guidance and the earnings beat. I really like the Square numbers. Stock gained about 3, 4, 5%, depending on what time you actually took a look at the after hours trading. As the owner of Cash App and Square Payment Systems raised their 2023 guidance and posted better than expected Q1 earnings. So the company actually expects their adjusted EBITDA for 2023 to be $1.36 billion compared to their previous guidance of $1.3 billion. And they also adjusted their operating loss from losing about $150 million earlier guidance now to a loss of about $115 million. Those guidance are really wonderful. That's solid. If we take a look one by one onto how they are able to beat this quarter, you'll see that a few things will stand out. Gross payment volume was a beat with $51.1 billion. This was an increase from last year. And then Q1 adjusted EPS was also a beat with an earnings per share now of zero point 0.4 versus a 0.34 consensus. This rose from 22 cents in the prior quarter and from 18 cents in the year ago quarter. So you're seeing actually Block's earnings beat expectations driven by Cash App. Share price is now higher on the back of the strong Q1 results and the guidance. So let's just go through a few things here. Their payment volumes right now is $51.1 billion per quarter. This is significant. They're growing with a gross profit now of 1.71 billion, 32% up year on year. You've got an adjusted operating income now of $51 million, up from $42 million loss last year. You've got adjusted EBITDA up 89% to $368 million, and their net loss has now improved from losing about $200 million now to as little as $17 million. And their April gross profit is also up 24%. Let's just go through the numbers and the news here. Revenue for the first quarter rose about 5 billion. Analysts only expected 4.6 billion, so that's pretty huge. That's a huge difference. Gross profits is now 1.7, so you can see that they really managed their costs from 1.3 billion before. That is a higher than expectation of 1.65. Executives are also viewing gross profit as a better gauge of their top line performance rather than the revenue figure, which contains large contributions from areas like Bitcoin trading that carry very small margins. So they want us to actually focus on the gross profits growing because their revenues here is actually is impacted with about $2 billion from Bitcoin trading revenue, which has very, very small margin, right? So here, Block posted 931 million in Cash App gross profit. So significantly, half of Block is now Cash App. No, so that's quite beautiful to know. Given Cash App was a business that they started, I believe, about 2015, or was it 20 but it wasn't like it wasn't that long ago, so it's still growing very, very hugely. And Cash App, actually today the company has 20 million Cash App card monthly active users in March. This is up 34% from a year ago, so you're seeing actually quite strong growth in terms of Cash App monthly active users. From January to April, more than 3 million customers also added funds to their Cash App Link savings accounts. So this fintech giant is really proving to us that they are quite a hugely profitable fintech name. Companies also seeing a lot of spend across discretionary, non-discretionary categories, indicative of a broad-based spend for the consumers. She also added that the Cash App, which is Block's mobile wallet, is seeing healthy inflow trends, with inflows per transacting user up 8% sequentially to $1,136. That's quite impressive given you've seen how banks, big banks, small banks, well, not necessarily big banks, the small banks, small regional banks have been getting quite a lot of outflows. And it's very important to see that Cash App has been getting inflows. So this is quite a beneficiary. Perhaps some people are more digital. They love to deposit more cash and savings towards their mobile wallet, where they can spend easily and more conveniently. So company raises full year forecast on profit metric. Take note that they have slowed their rate of hiring and they've been showing a lot of discipline around their marketing spending. So that really has been one of the reasons why Block has posted quite a big beat on their adjusted earnings metric. Now they're also saying that they're able to raise their full year earnings outlook. Yeah, so pretty much you can see that they're ahead on EBITDA. Very good numbers, really. And even if I say that Bitcoin revenue is not a huge margin for Cash App, the fact that Bitcoin revenue topped $2 billion in the first quarter is also wonderful to note. That Block is able to increase their revenue 25% year on year increase, despite the fact that Bitcoin has been pretty much still down from its all-time highs. So you're seeing actually there are some people who are opening their Cash App accounts to buy a little bit of Bitcoin every now and then. So also giving the Block share price a boost has been news that management is expecting to deliver, as I said, very good EBITDA guidance and very good outlook of just losing. Actually, they're expecting about $17 million loss versus $200 million loss. So pretty good as a whole company. Cash App profits really delivered very strong. That is actually a 50% increase year over year for that 931 million. Cash App's profit compared to the gross profit came in really huge, 930 versus 1.71 B. Okay, so very strong. I don't think the market expected Block to be this strong. So there's you can see this is the breakdown, no? So from 1.7, Bitcoin revenue went 2.1. Hardware revenue was flat. Very strong transaction payments, 1.2 to 1.4. And this one is subscription and services based revenue, 959 to 1.36. They mentioned that you look further more on the gross profits. So from 1.3 to 1.7, very, very good. So you can see these, they barely make money on Bitcoin, no? So 2.16, 2.113. So they're like that's just a $50 million revenue business for them. Yeah, like yeah. So Bitcoin is pretty small for them. They're really more of a transaction based and subscription based business. It's really it's still really all about the business is still really about Cash App. So Cash App and Square. Okay, so here it's very clear that we can see a very bullish move for Square. And so you could make a bullish call spread. This is a vertical spread wherein what you do is you buy the 63 calls. So you pay that 252 or maybe 248. And then you sell the 66 call, which is $1.47, which makes your cost roughly about $1 or $1.10 or $1.20. Since this is a $3 spread, then you expect the reward to be 3 minus your cost. So let's say 3 minus 1, you get a reward of 2. 3 minus 1.3, then you get a reward of 1.7. If and only if, of course, Square manages to break above 66 on May 19, 2023, which is about 14 days from now, 2 weeks from now, which I think isn't that hard to imagine given that Square really made quite a good earnings impression. And it's highly likely that it will bounce from its current levels. So, of course, if you are more bullish, that you think that 63, 66 seems to be a very tight range, you can, of course, consider buy 60 calls and sell 70 calls, right? So here, I took a look at it. To buy the 60 calls, that would cost you about $3.85. And then if you sell the 70 calls, you'll receive about 70 cents. So your cost will be reduced somewhere to about $3. You could potentially get a reward of $7 if you really hit that $70 mark by May 19, 2023. But either way, if you manage to get Square 60 at $3, that's pretty much in the money because right now Square is currently at 63, 64, I believe, after hours. So we'll see. Now, some news for you to also digest. Microsoft is now helping finance AMD's expansion into AI processors. Microsoft Corp is now working with AMD into an expansion to AI processors. And this might be able to offer an alternative to NVIDIA, which is dominating the market today for these so-called AI-capable chips, GPUs. Now, I don't know if this will really boost AMD's numbers, but I think that initially, when the market saw this, it triggered a rally on AMD. However, we saw that AMD's recent numbers was pretty bad. So I'm not sure how big of an impact this Microsoft AMD partnership is. It's more like I believe a short term relief rally for AMD. That's why it went from 82 to 92, but also trimmed down the gains towards 86. So that's just news for you. Let's give you more news and earnings. You've got Booking.com reporting actually a Q1 beat, but shares are actually down on an EBITDA miss. So you're seeing actually that not all companies are doing well. We also thought that the travel sector was doing well, that maybe Booking, travel related platform, would do well in terms of their earnings. However, even if they reported a beat, if they're not earning as much as the market expected, then of course they're gonna have a drop given the fact that Booking was trading near all-time highs prior to the earnings release. So let's just go through this. Booking Holdings actually have EPS of $11.60, a revenue of $3.8 billion. It's up 40% year over year, coming in better than consensus estimates of 10.67 and 3.76 billion respectively. Adjusted EBITDA, however, of $586 million missed both the company's and the analysts' expectations. So it's a matter of really having a miss on their metrics. That's why it's down a bit. So take note though that Booking reported an all-time quarterly high for both room nights of about 274 million and gross bookings of $39.4 billion. So you can really see that people really spent for the first quarter traveling 2023 with Booking.com. Wow, like that's quite a lot of room nights. Is it gonna be expected that Airbnb would also have great revenues? In some ways, maybe yes. But the question would be, would their operating metrics be recovering or very good as well? So I don't know, but I'm more optimistic actually that there will be quite a lot of strength in terms of beating estimates, given a lot of the hotels have reported actually a beat. So Hilton, Hyatt, Marriott, most especially doing a lot of beats with greater revenue par. So we'll see. But I think that there is an industry strength in terms of travel. We'll know the numbers next week from Airbnb. So after that EBITDA miss, you can see that Booking Holdings got sell off. 27, 26 is now opening at 25. So what can you do given that it has become a double or triple top here for Booking Holdings here at about 2,600 to 2,700. So you can actually assume that 2,680 calls will probably expire out of the money. And although there is very little liquidity on booking.com, what you could do is for June 16, 2023, which is about 40 days from now, typically what you'll do is sell the 2680 calls and buy the 2685 calls. Since this is a $5 with spread, try to just achieve 50% of the with spread. Try to receive 2.5. So if you do this, this is by booking their spread, their call spread. Receive negative 2.5, which means you have to have a credit, buy negative 2.5 so that you have a credit. At least 50% of the with spread, take it. Of course, if you can get higher, even better. Now, I also think that it might be prudent to nibble on a few Chinese issues. Take note that JD, which is actually near its October lows of 2022, looks actually very tempting at about 35, 34, 36. So what you could do there is instead of like buying the shares, let's assume that you're bullish in JD. You can actually think that in the next 14 days, there's two ways to go about it. Let's say you sell puts at 35 and buy puts at 34. Since this is a $1 spread, try to achieve at least one third of the spread, one third or one half, of course. So if you receive 37 cents to 50 cents, go do it so that your risk is about less than half, right? Now, if you also are very bullish that it will bounce, given that it's already retested the October lows, you can also do a buy 36 call and sell a 37 call. I understand that this is just a $1 with spread, but it's a 1:1 risk reward. So you're paying 50 cents and reward 50 cents. So if you're actually choosing to put $100, example, let's say buy two contracts to make a bull call on JD, then either your $100 expires out of the money and you lose that entire $100, or you actually win $100. So I think it's a fair game, and this is one of those bullish plays that you could make in JD. So why am I quite bullish on JD? Yeah, as I said, it has been retesting this October 2022 calls. And I think that these are quite a good retest support. So in case that you're assuming that this area is a support line, then maybe a bullish put spread is fine, or even a bullish call spread even before the earnings comes out. So I think that this is quite a good risk reward for JD.com. Another thing that you might be also interested upon is actually Alibaba. So for Alibaba, it's actually now trading at $82. Yes, it has significantly pulled back from its previous highs of about 120 and $100. But at $80, there's actually quite a lot of support. So at 78.77, you can do the same. You can make a bullish put spread here. This is just a $1 with spread. So as the same tactic, try to receive one third to a half of the with spread. Receive 35 to 50 cents on a 78.77 Alibaba bullish put spread with an expiry of May 19, 2023. Of course, you can also do the same. Let's say you want to make a bull call here, 83.84, then try to pay 50 cents to make 50 cents as well. So see if that is your cup of tea. Either make a Alibaba bull call or make a Alibaba bullish put spread. Now, for Alibaba Group, you can see from the chart that it has significantly retraced from about $120 towards about $83. The last time that the earnings actually was released, it was able to manage from going 80s to 120s. So we're actually seeing that this 80 area could be a source of support. Now, not all earnings will always be good. Sometimes it will also miss. But even if it misses, then actually there's twofold to actually think about it. There's a lot of IPO spin-offs that is planned on Alibaba. So they are actually planning to list their Lazada and their AliExpress in the US. So the online shopping unit, in my view, is quite a very good IPO to explore. However, there's no indication yet on the timeline for this IPO. So Alibaba's international digital shopping unit is exploring an initial public offering in the US as a potential strategy to boost growth. The business behind the brands like AliExpress and Lazada are now in negotiation to lead an IPO either next year or probably this year. Who knows, no? So maybe 2024. The size of the flotation has yet to be determined and considerations are still in the early stages. So the online shopping division is of course a competition with Amazon outside of China. It is one of the six individual parts that Alibaba is planning to break up into as part of an initiative unveiled in March to restructure the sprawling conglomerate. So we'll see how the market sees this news. But I think this is one, this Alibaba might actually be a good area of support around 77, 78, 80 areas, right? Okay, so also I'm also seeing that the Hang Seng Index futures is finding some supports as well. You can see that this could be an inverse head and shoulder pattern wherein the largest drop for Hang Seng Index happened here around November 2022. And then you're actually getting a lot of buying area supports here at about 18,000, 19,000, 20,000 in the Hang Seng Index, which means that if there are more buyers in China due to the China reopening, we've seen how the consumer recovery, it's slow, it's bumpy, but there is a little bit of recovery. So you might be actually buying, even if it's a higher low from about 15,000. I do believe that this is quite a good risk reward. Not saying that it will bounce immediately, but it looks to be a decent entry point. So actually, today we also saw Tencent 342 rallying 1%. Alibaba, there are some buyers on Tencent about 300, 330 areas. Alibaba, you got some buyers at 80s areas. China Mobile has been very strong. China Construction Bank, a lot of Chinese offshore oil, CNOC has been doing well. Yeah, so in general, we've been seeing some buying or nibbling or bargain hunting in Chinese issues. And I've seen this also happen even for the Chinese issues listed in US. You actually saw some companies like Yen, which is the triple levered long play in China. You're getting some small amount of buyers. It's not necessarily a huge volume, but we're seeing some trickling of buyers on JD, Alibaba, the usual. I don't think that Neo X Pevly is quite a very easy way to trade, but these autos every now and then they're quite cyclical. But we're seeing actually quite some supportive buying already on some Chinese tech, even Alibaba, even Baidu. We're getting a little bit of buying entries already. So you might want to actually consider looking at some Chinese issues. Now, of course, let's just give a brief commentary on Shopify. Shopify has done a huge gap up last night after earnings release, 24% up. But I think what's notable about the Shopify increase was the sale of their logistics business to Flexport. So Shopify is now actually planning to just really concentrate on their core business, and I think that's really what made the market very very happy. So what could we see on Shopify's movements? Well, obviously it was a blockbuster win for anyone who bought short term call options, right? You can see that 20% jump on Shopify shares have made lottery moves for all the buyers of calls from about 45 to 55. Those are rallying 300% to 900% and 10x. So I don't think that there's anything for us to do. It was really just a one-sided play for Shopify bulls to basically make money and all the Shopify bears to basically lose money as well. Sometimes there are gap ups that you can't really make any considerable idea to do anymore. So what I will think about Shopify is for now, it is a very bullish note. And since these e-commerce stocks, so for Shopify, it was a mixture of selling the units and really rationalizing the spending that really made the beat. After, of course, a drop of 86%, you can see that these growth names are trying to recover, albeit it's probably going to be bumpy. So some people are also selling 57 to 65, 66. So maybe we'll see. I don't know how high Shopify is going to be, but there seems to be quite a lot of bulls already at 45 and 40 area. Of course, when Shopify drops anytime within the next few months, if it even drops. I'm not even sure if it will drop, right? So all we know is that there's quite a huge 200-day moving average support now trading at about 40s. 37.44. So we can actually think about making bullish put spreads here as Shopify tries to make a gap fill. Okay, so that's it, guys. I think that I've given quite a lot of news and earnings. I hope you learned something using the reaction on some news to implement an idea for your trades. Whereas it could be as easy as just assuming a bounce because Apple has beaten, or you can just play an iron condor and Apple. You can just also consider bullish calls on Square. Whatever your ideas are, I do hope that our channel has helped open your opportunities. And see you again for another Awesome 10X video next week, Friday. Thank you very much. Bye bye.